Well, let's focus then on IREDA. The board has approved 4,500 crore fundraise via QIP, FPO, rights issue, preference issue. To talk about this development and more, we're joined by Mr. Pradip Kumar Das, the CMD at IREDA. Hi, Mr. Das. Good morning and always good to have you on the show. Thanks a lot for joining in. Well, the stock price has come off from around the 310 to around this 240 odd mark. It seems the street wants to get this fundraise out of the way and maybe a potential dilution by the government of India as well. So tell us about both these two aspects. When does the government plan on, selling that stake? Is it confirmed that it's going to be around 10%? And what about the fundraise that you're looking at as well? The quantum and what's the tool you're going to be using to raise this money?
Yeah, very good morning to you. And so first of all, there is nothing like government selling the stake because we need a fair amount of equity because knowing the kind of business we are in and the sectoral requirement, what it is, keeping in mind the 500 gigawatt. So roughly another 300 gigawatt to be added in the 6 years. So if you see post our IPO, our CRAR went up to 25 plus, and again it has come down to 19. And we need to ensure that healthy CRAR is maintained. So in order to ensure that and in order to ensure also the sectoral demand requirement for our kind of organization to come forward and support wholeheartedly, so we need fair amount of equity infusion again. So we have requested Government of India to allow us to go for fresh equity so that the fund will be infused to IREDA. It is not that government is going to sell their stake. So when we go for the fresh equity, then natural dilution will happen. So we have requested Government of India to consider that. And we have requested for up to 7%, up to 10%. And Government of India, they are examining. And very soon we will be coming out with the news, and we are hopeful that Government of India is going to allow us. And we have indicated a approximate figure of 4,500 crore requirement by January, February this year. So finally, we'll see what kind of market sentiment, market condition, and it is pertinent to mention that when we went for the IPO and the roadshows and others, the market was not that optimistic about us. And despite our quite good performance and governance quality and all, still market was not that positive. And therefore, the price what we had to finally agree to offer was quite low if you see today context. But at that point of time, that was the fairest of the fair. So the fresh equity, what is going to be infused, that will be adding to our net worth. That will further enable us to go for further borrowing so that we can plan for our disbursement, what we have kept in mind. And we have already submitted a roadmap for becoming Navratna to Maharatna by 2030. So by the time the country reaches 500 gigawatt, by that time, our loan book will be 3.5 lakh crore.
Mr. Das, I have two small quick questions. One is that if you go ahead and all the approvals come in, 4,500 crores of a QIP, this would dilute the government shareholding by how much? Right now it's 75%. So how much would it come down by?
So we have requested up to 10%, and assuming whatever government gives, if they allow 10%, and then our requirement 4,500 roughly we have indicated, by the time we go to the market, we see the market condition, then the percentage will be determined according to that. So we are expecting in the range of 5 to 10 at least will be requiring. So we have requested up to 7, up to 10. So finally, once government confirms what level they are allowing us, then accordingly, and very soon we'll be getting that information.
Sure. Got it. So roughly you're working with a 5 to 10% range. Let's see what final approvals you get. Again, working with the assumption that the QIP is full 4,500 crores. What is the boost to the CRAR that you'll get? Where is that level now? Where will it reach?
Now, whether it will be QIP or OFS, FPO or other modes, that again we will be deciding. We have not finalized that yet. Now, whatever it is, see 4.5 to 5,000 crore if you get, and again our CRAR will be crossing 25.
Okay.
25.
So
got it.
Again, we have to retain any point of time around 17, 18, because we need to ensure that we continue to maintain the stable AAA stable rating by the rating agencies, as well as recently we got from S&P the international rating. So we are now more responsible for that also. So we have to see overall requirement of disbursement or sanction from within the company to the sector, as well as keeping in mind that rating and other parameters.
So exactly on the rating, sir, you led us to the next question as well. Now you're rated equivalent to the sovereign, right? As per S&P Global, BBB minus. So that's
generally, if you see what my team gave me the input, that generally the company no company prefers to go to S&P directly when they are going for international rating. But since we have been exhibiting,
I get that, sir. No, so I get that. I just wanted to understand that with the rating being upgraded to BBB minus now, what is the benefit you can get on, say, cost of funds? I mean, what is the decline? What is the benefit that your shareholders can expect now that you're BBB minus as per S&P?
See, when we are given the domestic rating AA plus by one agency and AAA stable by 3 agencies, still we have to struggle in the market to convince why one agency had given. And finally, once all the domestic agencies to whom we had approached all had given AAA stable, almost 5-7 bips savings we could make it. And if you see our last borrowing, what we did around 1,500 crore, it was at 7.39 rate, and it was almost lesser than 7 to 10 bips what is prevailing in the market. So similarly, once we are having this global rating, see, overseas funding so far we could not explore. If you see March 20 onwards, we have not asserted to overseas funding because our landed cost is becoming costlier. So now with this international rating, we are quite confident. We are certainly going to get further help on reducing our borrowing cost, and fair amount of that reduction we are going to pass on to our sector, and some percentage definitely we are going to retain. So we are working on a win-win model where our investor as well as our borrower both are gaining.
Okay, all right. Mr. Das, give us a few numbers. 4,500 crores via the equity route. Via the debt route, what is the total fund raise you're looking at?
We have planned for this year around 24,000.
24,000. Got it.
Yeah.
And currently, what is your cost of borrowing?
Our latest, what I said, 7.39. Even now we are open, going for another 1,000 to 500 to 1,500 crore. That is already open in the market. In a couple of days, that will also be finalized.
So 7.4% is what you're borrowing at currently, and this 25,000. 7.39. 7.39. Sorry,
almost back.
Got it. Now, this 25,000 crores that you're looking to raise, could you break it up for us? How much of it will be NCD? How much of it would be from bonds? How much of it would be from overseas, as you were mentioning? If you could break it down for us.
Since you touched overseas, I'll respond that first. March 20, our resource composition, 57% was overseas and 43% is domestic. And if you see last June quarter, what result we have published, in that 84% is domestic and 16% only in forex. So we'll resort to now all these green funds, whatever available, cheaper sources overseas. We have to see ultimately the landed cost and the tenure, both. And we have to see the ALM mix also. And as far as domestic is concerned, so far all along we have been resorting to banks as well as institutional bonds. And we have requested Government of India for allowing us for 54 EC. We are hopeful we are going to get it soon. And once we get, then fair amount of 54 EC also is going to be in our basket. And apart from that, we'll see the right time, what kind of opportunity available. Our objective is to borrow right time, right amount at a right price.
So that's well said. So you're doing a lot of things. You're hoping that your borrowing mix, which is predominantly domestic, now with this rating upgrade, maybe you can go back and tap the overseas market if it is lucrative. You're saying you're looking at the 54 EC route as well. So all things put together, give us an outlook on the margin. What is the margin expansion that you would like to target this year? Where will exit margins be by the end of FY25?
See, March 22 onwards, the NIM was going down. And if you see last, I think year and a half, our NIM has been improved also. And normally, we do not focus on improvising NIM just like that. Because we are in a sector, the moment we enhance the interest rate onto the right, if you see our asset mix, 58% vanilla RE, where we are having cutthroat competition. There we cannot play with interest rate. But 18% of our book is having emerging RE, where we can, I can fairly tell you that we can charge any kind of interest the borrower is ready to pay us. But that is not going to serve the purpose of the sector, because the moment we enhance the rate, that the project which is become bankable now, that may not become bankable. And the project which is unstressed now may lead towards a bit kind of stress. So we are very conscious about that. And the 3.5, we are almost getting the NIM, and we are trying to reduce the borrowing cost. And as the time to come, our asset mix is also going to improve, and a fair amount of percentage is going to be there in emerging space, because that is what the developer expects in IREDA.
Sure. So just finally, you're saying 3.5 is the NIM that you'll target this year. And just one more number, sir. What is the AUM growth that you'll target this year? 15, 20%, 10%? Just one number.
The last 4 years, CAGR, if you see, we are having 27% of the loan book. And if you see other parameters, we are be it profit, be it sanction, disbursement, etc., that is your 30 plus CAGR. There is hardly in any kind of NBFC you get where you are getting the growth, and at the same time you are drastically reducing the NPA. So our focus to go on balancing approach. Since we have already given the stock exchange a roadmap by 2030, what kind of loan book would be, all the figures are available in public domain now. And at the end, I can tell you, we are not focusing on simply enhancing the loan book. Our ultimate aim is to maintain the asset quality, ensure that accounts are not getting into NPA zone.
Yes, absolutely. That's a very important sort of parameter as well. We don't want to see the mistakes of the previous cycle made again. So take your point completely. Thank you very much for joining in, and appreciate you making time for us this morning.